Alright, here's our example of a fund fact sheet. Alpha, guys, is the asset manager. The cash fund plus, that's the name of the fund. And this is the fund fact sheet, otherwise known as the minimum disclosure document. It's the minimum amount of disclosure you need to have as an investor to know what's potting. Pretty much all fund fact sheets have to have the following information on them. Okay, the fund managers, these are the people who are making the decisions. Important to know who these guys are that are deciding on the investment performance. Next would be the categorization. An example of a category would be where the fund is based, South Africa, what type of assets it buys, multiple assets, and how much equity exposure. This one would be low equity. And some few bits and bobs information like how big the fund is, how long it's been going for, and what the current price per unit is. So a little bit technical, but basically how big the fund is, how much money altogether is inside the fund, how much one unit of the fund would cost you as an investor. It's been going since 1999, and all funds have different classes. Those are the classifications. Basically, you have retail class for normal investors, and you have commercial or institutional classes. It's important to know which class you're investing in so you know you're not overpaying for something if you can find a cheaper class. That's all the basic info. Then very importantly, performance. How has the fund actually grown investors' money? The time and the performance. Over time, how has the fund performed? You can see this one's a little bit volatile, but over time it's actually done quite well. Generally, they use a benchmark to compare how has this fund performed against maybe inflation plus 2 or 3%. That's a nice visual way to have a look at how the fund's performed, but then they also give the numbers normally in a box over 1 year, year to date, 2, 3, 4, 5, 10, however long the fund's been going. And how they do that is they'll say our fund has done that percent over 1 year, that percent on average every year over 3 years, 5 years, and 10 years. Then they'll compare those figures to the benchmark. Benchmark is a measure to determine if the fund is doing well or not. The benchmark has to be disclosed here, normally maybe up here somewhere. Let's say inflation plus 3. So it'll be, let's say 6, 8, 10, 10. And what actually inflation has done. And very quickly you can see here that over every time period the fund has beaten its benchmark and inflation. When a fund beats inflation, it means that your money is actually growing. So that's great, real returns. For those people that like actuarial type numbery things, there's also a box here sometimes showing volatility, standard deviation, alpha, beta, gamma, kappa, whatever you want to call it. A lot of complicated things, but your advisor can tell you what it's all about. It's just a way to compare different funds to see how good the asset managers are at actually investing the money. Next, very important, we're going to have the breakdown of the asset classes that this fund has exposure to. Nice little pizza pie chart which shows you what percentage is offshore, how much is in cash, how much is in bonds, how much is in equity. That gives you a good idea of how aggressive it is, because if half of the fund was equity, you'd know it would be more on your aggressive scale. Only a portion is equity and the rest is split up nicely between lots of different asset classes. That would be like a balanced fund, combination of different asset classes. Then what they might do is break down the equity component a little bit better and say, what are the top 10 equities that this fund holds, to give you an idea of the types of companies that these asset managers like to buy. Normally the top 10 are there. So you can see, this company, PTYA, dodgy guys. In fact, why are they holding that much percent in that company? Or, hey, I like these guys a lot. They are a great company. If these asset managers buy in that company, then I think I can trust them. And then lastly, the fees. How much does it cost to run this fund? People are always trying to bring the fees down. Companies are always trying to get as much money as they can out of the funds. So there's certain specific classifications that everyone has agreed to. One of them is called the total expense ratio. What percent is that? Generally, conservative fund might be between, let's say, 0.75 to 1%. An aggressive type fund could be from 1.5 to 2.5%. Then a new classification on the block, total investment charge. This is a cover-all cost, which means there's no way to hide anything. This is how much it's going to cost you every year to run the fund. Generally includes a few extra bits and pieces, and then you have the TIC. The fees, that is a percentage that the asset manager will deduct from the value that you have invested in order to pay for the asset managers, for the company's overheads and costs in order to get this fund together. That's a fun fact sheet. Oh, James, so much info, so complicated. Oh, please summarize. What are the two most important things to look at a fund fact sheet? Okay. Performance. Is it good? Yes. Breakup of the asset allocation. Is it balanced, aggressive, or conservative? If you know those two things, you're pretty much halfway there. How do you find these fund fact sheets? Go to the website, try to find somewhere where it says fact sheets. There we go. Here it shows a selection of their different funds. Let's have a look at their balanced fund. What we actually need to try and locate is the PDF document. Allen Gray Balanced Fund, 31 December. Size of the fund. This is the performance it's done versus its benchmark. Since inception, 17.4% a year on average. That's not bad. Benchmark only did 12.8. Over 10 years, 1 year, etc. This is the worst it's ever done. This is how much months on average it's up. This is how volatile it is. Highest return ever in 1 year, lowest return ever in 1 year. Page 2, total expense ratio. That's how much it's going to cost you every year. Reduces performance. There's the top 10 shares in the fund. Total equity of the fund, over 70%. The rest is a little bit of property, mostly bonds and cash. Coronation Balance Plus. As at 13 November, it is a South African multi-asset high equity fund. Total expense ratio, this one costs you 1.75% per year. As you can see, it's been doing quite nicely ever since 1997. How much equity? 75% in equity offshore. Over the last 20 years, on average, did 14.4%. There's the top 10. That's what the fund has done in each month. Psg Equity Fund, Class A. There's all the basic info up here. This is high risk, pure equity fund. So the breakdown here is actually just the different types of equity that you get. Fund also done well versus benchmark over time. And here we have 1 year, 2 year, 5 years, 10 years, what the performance has been versus its benchmark, which is the JSE All Share. The last one we'll look at is the Prescient Income Fund. On the risk indicator, conservative. Total expense ratio 0.92%, so a lot cheaper because it is an income fund. A whole bunch of stats here. Over 1 year 8%, and since inception 9.6%. So you can see also beating its benchmark, but a lot more stable, not as aggressive as the other funds we've seen. Page 2, fund composition. So it's mostly cash, this fund. So let's compare these just based on performance over the last 10 years. This one's done 10.8%, 10.3, 11, 11.6, 9.3. So this fund, Psg Equity Fund, over 10 years has performed the best. Now we compare which is the cheapest. So yeah, total investment charge 1.87%, 1.72, 1.75, 2.09, 0.92. So this fund, Prescient Income Provider Fund, is the cheapest, which makes sense because it's an income fund, less volatile, less to do. Psg Equity Fund, aggressive, more expensive. Compare these on all kinds of factors: standard deviation, total expense ratio, volatility, you name it. That's the reason for fund fact sheets, so you can compare them. Okay, so that's it. I hope you guys enjoyed. I hope you learned something about fund fact sheets, and remember to like and subscribe.